welcome back to Block TV. It's time now for Hodel with Hedel, a chance to zoom out for a moment and take a wider perspective on some of the heady issues that dominate crypto markets as a whole. And to guide us on this journey of discovery, we're joined by Bitcoin influencer and thought leader Dan Held. Dan, great to have you back on the show.
Thanks again for having me.
All right, so to kick off this week, the story that just is dominating headlines, will not go anywhere, and will likely be with us for a long time to come. Coronavirus. Now, this is something I've been keen to speak with you about for a while here, Dan, because I feel the crypto markets as a whole and crypto people, let's say, have a very interesting take when it comes to pandemics of this nature or crises of this nature. And I feel as a representative and thought leader in this space, you've got a good handle on what that is. So Dan, break down for us a little bit about the crypto person's handbook when it comes to this particular crisis.
Yeah, so early Bitcoiners had this sense of being risk off. Early Bitcoiners in 2012, 2013, fresh off the 2008 financial crisis, bought Bitcoin as a hedge against volatility, a hedge against, going concern risk with their government and their money. And so Bitcoiners inherently, especially the earlier groups, were very much focused on being prepped for a wide variety of different situations, Bitcoin prepping them for a financial disaster, and a lot of that sort of thought process bleeding over into preparation for a virus outbreak or pandemic outbreak. And so I think a lot of Bitcoiners have been ready for this for a while, at least the OGs have. A lot of this thought process goes into like having enough water and food and medical equipment and everything else. So I feel that the Bitcoin community, with that kind of heightened sense of awareness about the world and risk, that bleeds not over, it doesn't just touch the financial market, that bleeds over into other things like medical issues as well.
What about, to sort of take this to its sort of next step, as it were, what about the risk of, let's say, panic in a situation like this? Do you think that has a risk from a crypto perspective of taking hold, a panic in a situation where, while certainly alarming, at this stage, we're still talking in the numbers, but in the 5-digit numbers in terms of overall infections globally, when you haven't quite even hit those 6 digits yet. It's not quite yet a global pandemic. What it turns into is another step. But is there a risk that some may prep too early, too soon, too hard, and risk causing a panic, whether we talk about in the physical world or in the market space?
I think there's a delicate balance of between being prepared and panicking. And so I think so far what we've seen is a pretty good response that isn't that panicky. In the United States, especially like here in San Francisco, which there's been a decent amount of activity here in the Pacific Northwest in the United States. And we haven't really seen, I think, what would constitute a panic. So I haven't seen like grocery stores, shelves empty. Most people are still going to meetups. People are going out to dinner. So I think people are keeping a pretty healthy balance of being cautious, but not panicked. And, there's nothing inherently wrong with panicking. It's as we've seen, as people who get into Bitcoin understand, the Bitcoin price is a very pure function of fear and greed. So, we can't really remove humans from being fearful. They're going to be fearful, and that will manifest into sort of what we call panicky sort of things around like hoarding food or, selling off their equities. So, but I think, selling off the equities actually makes quite a bit financial sense as the profitability of these companies drop as people stop going to, for example, some of the hardest hit stocks were casino stocks and travel stocks like airlines and Disney. So, I think the market is pretty justified in how things are selling off and how people are reacting in terms of getting enough supplies to make sure that they're covered in a quarantine situation.
Mm-hmm. So let's take the conversation from the individual to the marketplace, though, because we have seen, obviously, last week one of the worst week for wider equities markets in the United States and possibly around the world since the global financial crisis of 2008-2009. This week have some pretty significant volatility kicking off the week. Market up, market down, all sorts of things around. But in the crypto space as well, we didn't see an exact playing out of the narrative that had been espoused for a long time of the safe haven climb that was expected, at least in that shorter term time frame. Dan, what do you make of that drop that we had from close to around the $10,000 mark down to the mid 8,000s that we've seen in Bitcoin over the same time period?
Yeah, that's a good question. So a lot of people expect a safe haven asset to immediately spike during moments of despair or fear in the market. However, if we use gold, and I like to use gold because gold is a good close equivalent for what Bitcoin represents in the physical world. It's sort of the legacy product, if you want to think about it that way. Gold actually dropped some days during this sell-off. Gold did spike, I think yesterday and a few other days, but there were a few days when gold dropped as well. And so this was also done in the 2008 financial crisis, where gold actually sold off 30% right when the financial crisis hit. We saw people selling off for a wide variety of liquidity reasons and other reasons, but then gold surged in the next couple of years. So a safe haven asset doesn't necessarily have to move up or down exactly with the market or inversely with the market. I think these assets are largely uncorrelated in general, and that's what makes them a good safe haven, is that they're uncorrelated. The properties they have as a sound money or safe haven asset make them very, very sought after when markets are fearful. Gold and Bitcoin share a lot of those same properties of, essentially being, self-sovereign, where you have the ownership of that gold bar or that Bitcoin, and it's very hard to seize, and you can send it to anyone else you want, which makes it a very good sort of financial instrument. When people are fearful, people put money into that. So Bitcoin being a risk-off asset is a combination of the traits it has as a risk-off asset or money, and in combination with the market's perception of it being a risk-off asset. Bitcoin wasn't going to be a safe haven, risk-off asset in a binary function. It wasn't going to start out one day not being that and then become that on a Tuesday. It's a slow process of becoming more and more perceived as a safe haven asset. And we've seen that happen through time. When the US bombed Iran a few months ago, we saw Bitcoin with gold jump immediately at the same time. So Bitcoin did exhibit a safe haven property then, and Bitcoin actually dropped less than the S&P 500 during this recent coronavirus. So it may have not, skyrocketed during the fleet of safe haven assets, but it certainly, I think, performed well.
All right, so a tendency just not to fall in as sharp contrast as perhaps those markets around it. So looking forward then, obviously a number of different scenarios as to how this potential pandemic could play out. But looking across sort of middle of the road average scenarios that we see, what are your sort of estimates for what you think Bitcoin and crypto markets as a whole are likely to do should this crisis continue for some time to come?
Yeah, if the crisis continues, I think we'll see Bitcoin trade flat or drop a little bit. This, of course, is in the short to medium term over the course of the next few months. I think by the end of 2020, though, Bitcoin has a good chance of being above its all-time high price of $20,000. As the crisis deepens, I think we'll see the Fed, which the Fed has already cut interest rates by 50 bips. We'll see the Fed and other central banks enter into money printing operations. When they do that, we'll see gold and Bitcoin, I think, start to really outperform later in this year, as the realization that money printing is a solution for this will slowly kind of permeate the consciousness of the mainstream financial markets. Once that seeps in, they look at Bitcoin's scarcity of 21 million, and I think that's when we start to see a lot of capital flow into Bitcoin and the price going up.
All right, potentially some exciting developments into the medium and longer term as this crisis plays out, but it's certainly one to watch. But of course, coronavirus, as important and impactful as it is on global markets at the moment, not the only story worth watching at the moment. Just had a fascinating ruling come out from India's senior courts, ruling that the Reserve Bank of India's declaration to ban and block large parts of cryptocurrency trading in that country has been overturned. This is a potentially massive deal, Dan. Can you try and put it into some perspective for us here? What do you think this can really mean for cryptocurrencies in India?
Yeah, so the Indian Central Bank issued some very draconian regulations, essentially banning all crypto from India. And this recent overruling by the Indian Supreme Court, I think, is a great thumbs up for other countries in terms of saying, hey, if you ban it, you have to have a really good reason to ban it, and the free will of the people will eventually be eventually be given to them. So to see the Indian government, turn over this old, very draconian regulation, I think is phenomenal for the Indian people. I think it's a great example for the rest of the world. Couldn't be more excited for some Indian companies, including a colleague of mine, his Sonny with his Uno Coin, his former company that he co-founded. So happy for him that this happened. I think that was pretty tough for him to see his country ban Bitcoin. I think this also serves a good example of seeing how Bitcoin operates in a country when it's been banned, and also seeing how maybe our worst fear of a country banning it may or may not be an actual situation, especially as we look across the world. Every government across the world simultaneously can't ban Bitcoin at once. They certainly can't get their act together when it comes to climate change. So why would they get their act together when it comes to money?
This is certainly an interesting one. I mean, this potentially opens up cryptocurrencies to a market of almost 1.5 billion people that up until now only had limited access to a number of different cryptocurrencies. I mean, is this, do you think, part of a wider trend of potentially courts or even central banks to start regulating and legitimizing vast swaths of the digital asset ecosystem? Or is this, I mean, what I'm trying to ask, I guess, is this a one-off isolated event, or do you think this will have a ripple effect and repercussions across India itself and potentially throughout much of the rest of the world?
I think it's a somewhat isolated event. I'm not sure if the community was really super focused on India approving Bitcoin or legalizing cryptocurrency. So I don't think, we didn't see much of a reaction from the Bitcoin market when this news hit. I do think, we've seen Bitcoin slowly over time, over the 8 years I've been in it. We've slowly seen it become more and more legitimized. And for example, the Jerome Powell, the chairman of the U.S. Federal Reserve, he said Bitcoin is a speculative store of value, which I think couldn't be a higher recognition. I mean, that's the Fed. It's the largest central bank in the world. So Bitcoin slowly over time through this event in India, like Jerome Powell's quotes and other quotes, is becoming more and more real and more ingrained in the consciousness of the mainstream financial system and participants in it.
It's certainly a potentially powerful first move in a country, as I said, with almost 1.5 billion people, a potential whole new market. I have to see if it does pan out for the best and for Bitcoin and others as a whole into the future. All right, but one last topic I know you wanted to touch on today, Dan, that a notion when it comes to the classic investment strategy notions for Bitcoin. There's one that seems to ring true for many and gets a lot of airtime, but perhaps is in need of a little more clarification in these times of potential crisis and concern amongst markets and volatility around the world. That, of course, of dollar cost averaging. Dan, tell us a little bit about your thoughts on this method and why you do or don't recommend it to those out there.
Yeah, so acquiring Bitcoin back when I first got into it meant you had to wire money to Japan and then execute and go through a terrible KYC AML onboarding flow in Mt. Gox, and then learn how an order book worked. Nowadays, we've got great products like Kraken, SoFi, Cash App, where they've really, created an awesome onboarding flow. It's, on Cash App and some of these other brokerage type products, they've got one-click purchasing, so which is pretty phenomenal to kind of see it progress. There's kind of another stage called, dollar cost average. There's different other financial products that we can layer in here or strategies to accumulate Bitcoin. For example, like dollar cost averaging. And I think Coinbase was the first company to have this auto buy or recurring buy feature. And so that's what dollar cost averaging is you set up a certain percentage, of your paycheck, and you have that go into buying Bitcoin every week, every 2 weeks, or every month. And I think that's a really phenomenal way for most people to get exposure to Bitcoin. Most people, like I said, had to go wire money to like a weird shady exchange, or they did a one-off YOLO purchase where they took $10,000 and bought Bitcoin during a pump. But now with dollar cost averaging, we're seeing this kind of steady purchaser of Bitcoin. It's sort of this steady demand side pressure for Bitcoin. And that's great for Bitcoin, and it's also great for the users. A dollar cost averaging reduces a lot of the potential headache you might have if you buy high and then the price dips, or if you buy low and you don't feel like you sort of missed the dip. So it enables you to smooth out your entry points when you get into Bitcoin, which reduces the anxiety around buying it. So I think it's great for the consumer. It's also great for Bitcoin as a whole. Now we see this, tens or hundreds of millions of buy side pressure daily that doesn't really stop, which I think is phenomenal to making Bitcoin a more liquid and deeper market for the rest of the world.
A potential chance to make Bitcoin a bit more of an everyday part of life, factored into the monthly budget perhaps, rather than that one-off big slog that you sit and wait anxiously over for days, weeks, months, and years ahead. All right, certainly one strategy and one approach to approaching crypto markets as a whole. Dan Held, I want to thank you again for your sage wisdom in these volatile times. Certainly a lot ahead for markets as a whole, so stay with us at blocktv.com for all the latest in news and information. I'm Westropp-Evans. Thanks for watching.
For more news and updates, follow us on Twitter.